We want you to know.
Are we in our monetary reset and the end of money? Or are we living through yet another grand illusion where societies mistake cyclical instability for permanent collapse? And in asking this, we must wrestle with the sheer scale of the transformation underway, because while part one of this reflection explored the weight of history, debt, and the dual rise of central bank digital currencies and decentralized alternatives, we must now dig deeper into the structural forces, psychological undercurrents, and technological revolutions that make this reset different from any that came before. For never in human history has the entire globe been so interconnected financially, technologically, and culturally, and never has money been so abstracted from the material realities it was meant to measure, such as gold, labor, or tangible production. In ancient Mesopotamia, money was clay tablets inscribed with debts owed, tied to harvests and temple offerings, while in Rome it was silver denarii minted with imperial faces, and later in Europe it was gold and silver coins, whose weight bore intrinsic worth. But today, our money exists mostly as digits in bank ledgers, conjured into existence by keystrokes, backed not by metal but by promises, trust, and the coercive power of the state. And as we stand in 2025, the question gnawing at the collective imagination is whether that trust has stretched too thin, whether the grand experiment of fiat has reached its breaking point. For the signs of strain are everywhere. Inflation has returned with a vengeance in many economies after decades of being considered tamed. Wages have stagnated while inequality soars to obscene levels. Debt piles higher and higher without realistic paths to repayment, and geopolitical rifts fracture the dollar system as rising powers seek alternatives. Yet alongside this decay emerges a dazzling technological frontier: blockchain networks, programmable money, artificial intelligence-driven financial systems that seem poised to reinvent what we mean by money itself. So what does a reset truly entail in such an environment? And how might it unfold? Some analysts envision a quiet, technocratic reset orchestrated by elites through the introduction of CBDCs, debt jubilees, and global agreements brokered by institutions like the IMF or the Bank for International Settlements, in which old debts are restructured, currencies revalued, and citizens nudged seamlessly into new digital frameworks, all marketed as progress and stability. But beneath the polished rhetoric would lie a deeper reality: surveillance baked into every transaction, the erosion of financial privacy, and programmable money that can expire, be geo-fenced, or denied for disapproved behavior, essentially merging money with governance and behavioral control. And in this vision, the end of money would mean the end of neutral, of apolitical cash, and the birth of money as a tool of social engineering. Others imagine a more chaotic reset, driven not by elite consensus, but by systemic collapse, in which trust in fiat disintegrates so rapidly that populations flock to alternative assets. Gold, Bitcoin, real estate, barter networks, forcing governments to play catch-up, scrambling to maintain authority as their currencies implode. And in such a scenario, the end of money would manifest as the end of fiat's monopoly, a fragmentation into parallel systems where official money coexists uneasily with community currencies, crypto tokens, and commodities, resembling more the medieval patchwork of overlapping monies than the centralized nation-state model we take for granted today. And yet there is a third vision, subtler and perhaps more profound, in which money as a category itself dissolves, not in the sense that exchange disappears, but in the sense that value is mediated through entirely new dimensions, where reputation, data, attention, or even health metrics become the new currency, where algorithms assign worth to our behaviors, and where transactions blur into flows of information so seamlessly that we cease to think of money as separate from life. And in this scenario, the end of money is less collapse than metamorphosis, a dissolving of boundaries between economics, politics, and culture into a total system of quantified existence. To assess which path is most likely, we must interrogate the drivers pushing us toward reset. First, the mathematical impossibility of infinite debt growth on a finite planet. For while central banks can expand balance sheets and governments can issue bonds, there comes a point where faith in repayment collapses, and when that faith erodes, resets occur, whether by inflation, default, or restructuring. Second, the geopolitical reality that U.S. dollar dominance, while still formidable, is no longer unchallenged, as China, Russia, BRICS nations, and regional blocs increasingly experiment with bypassing the dollar in trade, settling in local currencies, or even exploring commodity-backed alternatives, thereby chipping away at the linchpin of the current system. Third, the technological inevitability that digitalization will redefine how we transact, regardless of whether states or decentralized networks prevail. Because just as the internet transformed communication, the digitalization of money is transforming exchange, bringing efficiency, but also risks of surveillance and fragility. And fourth, the sociological pressure of generational change. For younger populations born into digital ecosystems are less attached to cash, less trusting of legacy banks, and more willing to embrace crypto-native alternatives, meaning that cultural legitimacy is shifting beneath our feet, and this shift may prove as decisive as any macroeconomic force. When these four drivers, debt, geopolitics, technology, and culture, converge, the probability of a reset becomes near certain, though its shape remains uncertain. And herein lies the human drama. Resets are not merely financial events, but existential ones, reshaping how people perceive security, freedom, and identity. For money has always been more than a medium of exchange. It is a story, a collective hallucination, a shared belief in value. And when that story unravels, civilizations themselves are destabilized, as seen in Weimar Germany, where hyperinflation shredded the social fabric, paving the way for extremism, or in the fall of the Soviet Union, where the collapse of the ruble left millions scrambling for survival. And so if indeed we are entering our own monetary reset, the stakes are not just economic but civilizational. And yet, in all this uncertainty, one truth persists. Humanity adapts, new stories of value emerge, and what seems like the end often births a beginning. So perhaps the end of money as we know it will not mean the end of exchange or wealth, but rather a transition into forms we cannot yet fully imagine. Perhaps tokens tied to energy carbon credits linked to climate goals or decentralized identity systems where trust itself becomes the currency. And while these possibilities sound speculative, the pace of technological innovation suggests they are not far-fetched. Skeptics may still argue that fiat will endure, that governments are too powerful, and that the inertia of existing systems guarantees continuity, and indeed they may be correct in the short term. For resets rarely announce themselves overnight, but unfold through gradual erosion punctuated by crisis. Yet even if fiat survives, it will not be the same fiat. It will be digitized, surveilled, and re-engineered to meet the demands of a networked world. And in that sense, we may already be living in the reset without quite realizing it, like frogs in slowly boiling water, acclimating to each new shift until the system we inhabit is unrecognizable from the one we grew up with. Therefore, the question is less, are we in our monetary reset and the end of money? And more, what kind of money is being born out of this reset? And what kind of future will it create for freedom, privacy, and human dignity?